Exemption under section 1010D. Many students are having doubts. Many students finds it difficult to understand exemption under section 1010D. Today I am going to simplify it to the core, and I am going to give handwritten notes as well for 1010D exemption. You will find it very easy. Listen it to the end. Do you remember in section 80C in chapter 6A deductions, we discussed one concept. If life insurance policy is taken before 1st April 2012, then maximum deduction available under section 80C is equal to actual life insurance premium or 20% of sum assured, whichever is lower. If life insurance policy is taken after 1st April 2012 but before 1st April 2013, then deduction under section 80C is equal to actual life insurance premium or 10% of sum assured, whichever is lower. If LIC policy is taken after 1st April 2013, if you take policy for disabled persons or suffering with specified disease persons, if you take policy for them, deduction under section 80C is equal to actual life insurance premium or 15% of sum assured, whichever is lower. If you take policy for other persons, actual life insurance premium or 10% of sum assured, whichever is lower. The thing is, if actual life insurance premium is lower than the limits, lower than 20% or 15% or 10%, whatever the limit that is applicable, if actual life insurance premium is lower than that limit, then maturity amount that is going to be received including bonus is not taxable. That will be exempt under section 1010D. Are you able to understand? So whatever the premium that you are paying for life insurance policy is there, such premium amount should be lower than the limits, 20% of sum assured or 15% of sum assured or 10% of sum assured. Then whatever the maturity amount including bonus that is received is there, that is not taxable, that is fully exempt under section 1010D. If actual life insurance premium paid is more than the limit, then maturity amount is not exempt, maturity amount is taxable. I will give one example so that you will get better understanding. Let's say life insurance policy taken on 10th April 2012. Let's say premium is 80,000, sum assured is 10 lakhs. Now, how much is actual life insurance premium? Actual life insurance premium is 80,000. 10% of sum assured is 1 lakh. Actual life insurance premium is less than 10% of sum assured. 1st April 2012 means it was taken during 12-13 previous year. Then limit applicable is 10% of sum assured. Here actual life insurance premium is less than 10% of sum assured. Therefore, maturity amount of 10 lakhs is fully exempt under section 1010D. Are you able to understand? So if actual life insurance premium is less than the limits that are specified, then maturity amount is not taxable, maturity amount is fully exempt. For example, let's say sum assured is not 10 lakhs, sum assured is 6 lakhs. Okay, in that case, actual life insurance premium is 80,000, 10% of sum assured is 60,000. In that case, actual life insurance premium will be greater than 10% of sum assured. So in this case, whatever the maturity amount is there, maturity amount is taxable. Are you able to understand? How much is maturity amount? Maturity amount of 6 lakhs is taxable. So from this, how much income is taxable, whether total 6 lakhs is taxable or only certain amount is taxable, that I will explain little later. But from this explanation, you got an understanding. If actual premium is less than the limits, maturity amount exempt. If actual premium is more than the limits, then maturity amount becomes taxable. So you got that much clarity, right? Now let us start writing. I am leaving one and a half page for my rough work. I don't want to disturb the flow. So for rough work I am leaving. So whenever I tell any example, I will write there. Pure provision I am going to write in a new sheet. Okay. So maturity amount including bonus is fully exempt under section 1010D is fully exempt under section 1010D in following cases. What are those cases? If policy taken before 1st April 2012, if policy is taken before 1st April 2012 and actual life insurance premium is less than or equal to 20% of sum assured. In that case, maturity amount including bonus is fully exempt. Am I correct or not? Next, if policy is taken after 1st April 2012 but before 1st April 2013, then if actual life insurance premium is less than or equal to 10% of sum assured, in such a case maturity amount including bonus is fully exempt under section 1010D. Correct? If policy is taken after 1st April 2013, if policy is taken for those who are suffering with disability or specified disease, for them if you take policy, then if actual life insurance premium is less than or equal to 15% of sum assured, in such case maturity amount including bonus is fully exempt. If you take life insurance policy for other persons, then actual life insurance premium less than or equal to 10% of sum assured. In such a case, maturity amount is not taxable. Maturity amount is fully exempt under section 1010D. But if you take policy on or after 1st April 2013, if life insurance policy is taken on or after 1st April 2023, very important amendment made in as amended by Finance Act 2023. So you can write here, if policy is taken after 1st April 2013 before previous year 23-24. In that period, if you take policy, those rules are applicable. If you take policy for disabled or specified disease persons, actual life insurance premium should be less than or equal to 15% of sum assured. If you take policy for other persons, actual life insurance premium should be less than or equal to 10% of sum assured. If policy is taken on or after 1st April 2023, then you need to check whether it is single policy or multiple policies. If SSC has taken single policy, my dear students, before 1st April 2023, only one condition is there. Actual life insurance premium should be less than the particular limits 20%, 15% or 10% of sum assured. From 1st April 23 onwards, two conditions are there. Actual life insurance premium should be less than limits, and premium, whatever the premium that you are paying, premium amount should be less than or equal to 5 lakhs. Only if premium amount is less than 5 lakhs, then only you can claim exemption. Otherwise, you cannot claim exemption. Are you able to understand? If premium amount is more than 5 lakhs, then 1010D exemption is not available. So if you take life insurance policy on or after 1st April 2023, whatever the policy that you have taken, if it is single policy, then condition 1, actual life insurance premium should be less than or equal to 10% of sum assured. What is the conjunction? Conjunction is and. Both the conditions are required to be satisfied. Condition 2, premium should not exceed 5 lakh per annum during tenure of such policy. Let's say policy is for 6 years. In any 1 year, the annual premium that is required to be paid should not be more than 5 lakhs. If it is more than 5 lakhs, exemption is not available. Before 1st April 23, to claim exemption under section 1010D, there is only one condition. Actual premium should be less than the limits. On or after 1st April 23, to claim exemption under section 1010D, two limits are available. First limit, actual premium should be less than the limits. Second condition, annual premium during the tenure of the policy should be less than or equal to 5 lakhs. Should not exceed means it should be less than or equal to 5 lakhs. If both these conditions are satisfied, then only exemption under section 1010D is available. In remaining all other cases, exemption is not available. It is taxable. Are you able to understand? Maturity amount including bonus is taxable. Okay. Now, if SSC has taken multiple policies, there is no such rule that he should take only single policy, right? If he takes multiple policy, then how exemption under section 1010D is available? I will not share these notes with you. If you want to write, write now, otherwise I will not share. If SSC has multiple policies, if SSC has taken multiple policies, then condition 1, actual life insurance premium should be less than or equal to 10% of sum assured for individual policy. Individual, you took 4 policies. For each individual policy, actual life insurance premium should be less than or equal to 10% of sum assured. That means only those policies are eligible for exemption. And condition 2, aggregate premium of 2 or more policies is less than or equal to 5 lakhs. Aggregate premium of 2 or more policies is less than or equal to 5 lakhs. That means, let's say you took 4 policies. Out of 4 policies, 4th policy, actual premium is more than 10% of sum assured. Eliminate 4th policy. In remaining 3 policies, actual life insurance premium is less than 10% of sum assured. Out of those 3 policies, for those policies whose aggregate premium is less than 5 lakhs, those policies are eligible for exemption under section 1010D. I will give example, no worry. Listen. So you can write note point. In case of multiple policies, exemption is not available for all policies. Exemption is not available for all policies. Exemption is available for sum of two or more policies whose aggregate annual premium is less than or equal to 5 lakhs. So if you take more than one policy, for all policies exemption is not available. You need to choose some policies whose aggregate premium is less than or equal to 5 lakhs. Only for those policies exemption is available, and condition 1 is also required to be satisfied. For those policies individually, like premium should be less than or equal to 10% of sum assured. Are you able to understand? Now shall I give an example? Everybody, let's say there are 4 policies: policy A, policy B, policy C, policy D. Life insurance premium. For policy A, premium is 1,20,000. For policy B, premium is 2,10,000. For policy C, premium is 1,10,000. For policy D, premium is 2 lakhs. What is aggregate premium for all policies? 2 lakh plus 1,10,000, 3,10,000, 6,40,000. So from this, it is clear, for all policies you cannot claim exemption under section 1010D, because all policies together annual premium is crossing 5 lakhs. So you cannot claim exemption for all 4 policies. Correct? Next. Here, assumption is all policies life insurance premium is less than or equal to 10% of sum assured. That means for this example, my assumption is condition 1 is satisfied. Now I am checking for condition 2. Are you able to understand? Now just think independently. What I said, if you take multiple policies, if aggregate premium of all policies is greater than 5 lakhs, you cannot claim exemption for all. Now I can choose combination of 2 or more policies whose aggregate premium is less than or equal to 5 lakhs. Let's say I will choose A, B, C. These 3 together, how much is premium? 1,20,000 plus 2,10,000 plus 1,10,000. So option 1. What is my selection? As per option 1, my selection is A, B, C. If I choose ABC, how much is my aggregate premium? 4,40,000, which is less than 5 lakh. So this alternative is available, right? So you can choose A, B, C. This is option 1. Now, option 2, I am changing. I will do permutations and combinations. I will choose A, I will choose C, I will choose D. If I choose A, C, D, how much is my aggregate premium? 4,30,000. Correct? Option 3. I will choose ABD, not De Villiers. Okay, Mukund will get attracted. I will choose A, B, D. If I choose A, B, D, how much is my aggregate premium? Oh, 5,10,000. It's crossing 5 lakhs. So this combination is not possible. Correct? You should not choose that combination. That means either you can choose option 1 or option 2, whichever is beneficial to the SSC. If I am the consultant, I will give advice to choose option 1 because 4.4 lakhs is exemption. Like, 4 lakh 40,000. That means maturity amount may be more for option 1. How do we evaluate? We will check maturity amounts. For ABC, let's say maturity amount is 44 lakhs. Let's say for ACD, maturity amount is 43 lakhs. Then what is the advice that you will give? You will ask him not to go with this. You will ask him to go with this so that you can claim higher exemption. You can claim 44 lakhs as exemption under section 1010D. Are you able to understand? So let me quickly revise whatever that we have discussed it till now. If you are taking life insurance policy, if policy is taken before 1st April 2012, actual premium or 20% of sum assured, whichever is lower is eligible for deduction under section 80C, and if actual premium is less than 20% of sum assured, maturity amount is exempt. If you take policy after 1st April 2012, before 1st April 2013, then if actual premium is less than 10% of sum assured, then maturity amount including bonus, if any bonus is also received, that is also fully exempt under section 1010D. You took life insurance policy after 1st April 2013 but before 1st April 2023. If you took policy for disabled and specified deceased persons, then actual premium or 15% of sum assured, whichever is lower. And if actual premium is less than 15% of sum assured, maturity amount including bonus is exempt. If you take policy for other persons, actual premium, if it is less than 10% of sum assured, maturity amount exempt. Till that time, happy, only one condition. But from 1st April 23 onwards, if you take any life insurance policy, two conditions are required to be satisfied for claiming exemption under section 1010D. First condition is actual premium should be less than or equal to 10% of sum assured, and aggregate, if you are taking single policy, premium for that policy should be less than or equal to 5 lakhs during the tenure of such policy. If you are taking multiple policies, both the conditions are required to be satisfied. For each individual policy, actual premium less than or equal to should be less than or equal to 10% of sum assured, and exemption is not available for all policies. Exemption is available for combination of those policies whose aggregate annual premium does not exceed 5 lakhs during the tenure of such policy. So based on that, we are going to provide exemption. Here we have seen the example as well. Are you able to understand? Now, second point. If actual life insurance premium is greater than 10% or 15% or 20% of sum assured, or if life insurance premium is greater than 5 lakhs on or after 1st April 23. Before 1st April 23, that condition is not there. So if actual life insurance premium is greater than 10%, 15% or 20% of sum assured, or if actual life insurance premium is greater than 5 lakhs, then maturity amount is no more exempt. Maturity amount including bonus is not exempt under section 1010D. That means what? If it is not exempt, it is taxable. Are you able to understand? It is taxable. So are you able to understand till here, everybody? Shall I explain the next point? In case of death, life insurance policy. Let's say I took life insurance policy for 5 years. Every year I will pay premium. During these 5 years, if something happens to me, my family will get compensation. If nothing happens to me after 5 years, I will get maturity amount. Are you able to understand? Now, upon death of SSC, compensation received by family members is fully exempt. Family members is fully exempt under section 1010D, irrespective of annual premium of policy. Irrespective of annual premium of policy. What do you mean by this? Actual life insurance premium greater than 10% of sum assured, or actual life insurance premium is greater than 5 lakhs on or after 1st April 23. Generally, in this case, exemption under section 1010D is not available. Am I correct or not? Am I correct? In this case, exemption under section 1010D is not available. But exception. What is exception? Exceptional case. Exception is death of SSC. Even though actual life insurance premium is greater than 10% of sum assured, even though actual premium is greater than 5 lakhs, still exemption is available upon death of the SSC if compensation is received by family members. Are you able to understand? Death of insured, against whose life the insurance was taken, upon his death, if any compensation is received, fully exempt irrespective of annual premium. Now, did you understand what irrespective of annual premium means? Whether his premium is greater than 5 lakhs, whether his premium is greater than 10% of sum assured, still compensation received upon death is fully exempt. Otherwise, the objective is getting deviated. The objective of taking policy is main purpose to reduce the risk of his death. If he dies, his family will be at stake. To reduce that risk, he has paid the policy so that family will get compensation. So upon death, if any compensation is received, don't think about amount of premium. Don't think whether it is less than the 10% of sum assured or not. Fully exempt under section 1010D. Are you able to understand? Shall I explain the next point? I am going very slowly. I know it because I want to give clear-cut clarity to you on every point. Highly, a question can be expected out of this recent amendment. No worries. For this concept, I am not thinking of time. My sole objective is to make you understand as clearly as possible. Next point. Do you know term insurance? Can someone tell the difference between term insurance and life insurance? In case of life insurance, during the tenure of policy, insured dies, family will get compensation. During the tenure, insured does not die. In such a case, he will get maturity amount. In case of term insurance, there is no concept of maturity amount. Only if you die, then only you will get the compensation. If you do, like if insured does not die during the tenure of the policy, once policy gets expired, nothing you will get. No amount you are going to get. Are you able to understand? That's how. So here, please listen. Life insurance policy term insurance policy. What is the difference? In case of life insurance policy, upon death, compensation will be received. In case of term insurance policy also, upon death, compensation is received. No death at the time after expiry. After expiry of policy. Under life insurance policy, insured will get maturity amount including bonus that will be received. However, in case of term insurance policy, maturity amount will not be paid. Nothing payable. That means term insurance policy is purely risk policy. Only in case of death, compensation will be paid. Life insurance policy, risk come investment. If insured dies, compensation will be paid. If insured does not die at the time of maturity, maturity amount will be paid. So risk come investment. It is risk come investment policy, life insurance policy. Term insurance policy, purely risk policy. Only in case of death, amount will be paid to the insured. Family members of insured. That's why in term policy, premium is low compared with life insurance policy. Because if death does not happen, casualty does not happen, no amount will be paid back to him after the expiry of the policy. That's why term insurance premium is lower. By this time, you would have got clarity. If you get any compensation from term insurance policy, that is fully exempt under section 1010D, because you will get compensation only in case of death. In case of term insurance policy, that is fully exempt under section 1010D. There is no taxability of compensation received from term insurance policy. I hope you got that clarity. Did you get? So, compensation received from term insurance policy is fully exempt under section 1010D. Why? Because compensation under term insurance policy is received only in case of death. Correct? Another note point, while calculating limit of 5 lakhs, GST paid on insurance should not be considered. GST amount paid on insurance should not be considered. GST amount paid on insurance should not be considered. What do you mean by this? You should only consider taxable value. When you are paying insurance, he will also charge GST. GST amount don't consider while calculating the limit of 5 lakhs. That means taxable value, amount before GST. If that amount is less than or equal to 5 lakhs, then exemption is available. Do you know the difference between taxable value and invoice value? Let's say taxable value is 100. To that you add GST at the rate of 5%. Tax plus GST you will call as invoice value. 105 is invoice value. So while calculating limit of 5 lakhs, you should not consider invoice value. What you need to consider is taxable value. GST amount should not be considered while calculating the limit of 5 lakhs. I hope now it is crystal clear to you. Shall I proceed further? Everybody? So this is the concept. In our material, there are 10 problems relating to this. All those 10 problems, let us do one by one, so that you will get clarity. Concept wise, this much is the concept. I hope you got clarity on each point of this concept. Am I correct? Shall we do problems? Only you have, if you have crystal clear conceptual clarity, then only you will do problems. You can do problems. So open example 1, page number 16.3. You can see list of 10 examples that are given here. Don't get scared, I am there with you. We are going to solve together. It will be very easy. Okay. Example 1. When policy was issued 1st April 2013. That means after 1st April 2013, before 1st April 2013. On 1st April 2013. Correct? So what is the criteria? 10% of sum assured or 20% of sum assured? If policy is taken for disabled persons or specified disease persons, 15% of sum assured. For other persons, criteria is 10% of sum assured. Annual premium 6 lakhs. Sum assured 60 lakhs. Consideration received on maturity 70 lakhs. See, sum assured is 60 lakhs. But maturity amount received is 70 lakhs. That means hidden bonus is 10 lakhs. Are you able to understand? Now, if nothing is specified, we should take assumption he is not suffering with disability, he is not suffering with any specified disease. Because if he is suffering with disability or specified disease, that will be clearly mentioned in the question. Now, what is the criteria? Please tell me. Example 1. What is criteria? How much is actual life insurance premium? Actual life insurance premium 6,000. 6 lakhs. Policy was taken on 1st April 2013. We should take assumption it was taken for the person who is not suffering with disability. So criteria is 10% of sum assured. How much is 10% of sum assured? 60 lakhs into 10%, 6 lakhs, correct? 6 lakhs. So it is exactly equal to, therefore maturity amount is fully exempt under section 1010D. This is trail ball, okay, laddu ball. Shall we do example 2? As we progress further, the complexity increases. Date of issue 1st April 23. Annual premium 5 lakhs. Sum assured 50 lakhs. Consideration received on 1st November 2033, 52 lakhs. When it was taken? 1st April 23. Two conditions. Remember. You need to remember timelines and conditions properly. Policy was taken on 1st April 23. Correct? Example 2. Policy taken on 1st April 23. So in this case, not one condition, both conditions are applicable. What is the conjunction? And only if both the conditions are satisfied, then only exemption is available. If any one of the conditions not satisfied, then it is taxable. Condition 1. What is criteria? Actual premium should be less than or equal to 10% of sum assured. How much is actual life insurance premium? 5 lakhs. How much is 10% of sum assured? 5 lakhs. Actual premium is exactly equal to 10% of sum assured. Condition 1 satisfied. Condition 2. How much is annual premium? Exactly 5 lakhs. Annual premium is exactly equal to 5 lakhs. Condition 2 also satisfied. Both the conditions are satisfied. Maturity amount is fully exempt under section 1010D. Shall we do third one? This is batsman trials. Example 3. Date of issue 1st April 23. Careful. If date of issuance of policy is after 1st April 23, very careful. Annual premium 6 lakhs, sum assured 60 lakhs, maturity amount is 70 lakhs. That means what? Bonus is 10 lakhs. Now when policy was taken? Policy taken on 1st April 23. So do we need to check one condition or two conditions? We need to check both the conditions, right? Condition 1. How much is actual life insurance premium? 6 lakhs. How much is 10% of sum assured? 6 lakhs. Actual life insurance premium is exactly equal to 10% of sum assured. Condition 1 satisfied. Condition 2. How much is actual premium? 6 lakhs. That means it is greater than 5 lakhs. Condition 2 not satisfied. In this case, whether maturity amount is exempt? Maturity amount is not exempt under section 1010D. Correct. Shall we do fourth one? Everybody? Fourth one. See, till now, first 3 examples, single policy. From fourth example onwards, you can see multiple policies. 2 policies are there. So you need to be very much careful. So there are 2 policies, policy number A, policy number B. Both are taken after 1st April 23. So even more cautious. For each policy, you need to check condition 1. For aggregation of policies, you need to check condition 2. Are you able to understand? When multiple policies are given, for individually you will check condition 1. Combinedly you will check condition 2. Okay. So shall we check? Everybody? Example 4. Both are taken after 1st April 23. That is clear. So policy number A, policy number B. First we are checking condition 1. How much is actual life insurance premium for policy A? For policy B? 2 lakhs. How much is 10% of sum assured for policy A? How much is 10% of sum assured for policy B? 2 lakhs. So for policy A, actual life insurance premium is exactly equal to 10% of sum assured. In case of B also, actual life insurance premium is exactly equal to 10% of sum assured. Condition 1 satisfied for A, condition 1 satisfied for B. Condition 2 you cannot check individually, you need to check combinedly, you need to check aggregatedly. How much is aggregate premium? Aggregate premium of A and B? 5 lakhs, which is exactly equal to 5 lakhs. Condition 2 also satisfied. So maturity amount of both the policies are exempt under section 1010D. Are you able to understand? Till here, are you clear? We are just doing basics. Shall we see example 5? Example 5. There are again 2 policies, A, B, both are taken after 1st April 23. Example 5. Both policies taken after on 1st April 23. First, what I said, we need to check condition 1 individually. So we can do filtering with condition 1. Those policies which do not satisfy condition 1, we will eliminate them. Only balance we will take for checking condition 2. Correct? So policy A, policy B. Please tell me how much is actual life insurance premium for policy A? 4.5 lakh. How much is actual life insurance premium for policy B? 5.5 lakhs. Eliminate. Or okay, fine. How much is 10% of sum assured? How much is 10% of sum assured? Same, 4.5 lakh, 5.5 lakh, correct? So, condition 1 satisfied for A, condition 1 satisfied for B also. For condition 2, for policy B, annual premium is 5.5 lakhs, which is greater than 5 lakhs. So B is not eligible for exemption under section 1010D. Individually, B is not satisfying condition 2. In case of policy A, annual premium is 4.5 lakhs, which is less than 5 lakhs. So condition 2 satisfied. So policy B is, you can claim exemption under section 1010D for policy A. For policy B, exemption is not available. It's going to get taxed. So did you understand example 5? So we can do one filtering criteria. What is filtering criteria? At the beginning, those policies whose annual premium is more than 5 lakhs, eliminate them. Next, for remaining policies, check condition 1, condition 2. Are you able to understand? Based on that, take the decision. We will do remaining 5 examples also, 6 to 10 examples. At last, let us write filtering criteria. Based on that, you can do the problem in the examination. Okay. Are you finding it easy? Example 6. I received so many requests from students for May 2025 attempt to make a video on 1010D exemption, because lot of confusion is there. If you read ICA material, you will find stars. But this cannot be revised very quickly. That's why I am taking time and teaching. Example 6. There are 3 policies, A, B, C. All policies are taken after 1st April 2013. Okay. Now please tell me policy A, policy B, policy C. How much is sum assured? Sorry. How much is annual premium? First question. How much is annual premium? 1 lakh, 3,50,000, 6 lakhs. You can eliminate C straight away because C annual premium is greater than 5 lakhs. Eliminated. Now for C, like 1010D exemption is not available. Correct? 1010D exemption not available for C. Now we need to play game with only A and B, policy A and policy B. Don't think about policy C. It is already under tax purview. Policy A. Let us check condition 1. How much is actual life insurance premium? Actual life insurance premium 1 lakh, 3.5 lakh. How much is 10% of sum assured? 1 lakh, 10 lakh, 1 lakh only. 10% of sum assured for B, 3.5 lakh. Condition 1 satisfied. Condition 2 satisfied. Condition 2. Aggregate premium of A and B. How much is aggregate premium of A and B? 1 lakh plus 3.5 lakh, 4.5 lakh, which is less than 5 lakh. Condition 2 satisfied. So for policy A and B, you can claim exemption under section 1010D. Exemption under section 1010D is possible. Clear? Shall we do example 7? You should understand that logic. It will be simple. Now 4 policies. Careful. X policy was taken before 1st April 23. Am I correct or not? So only condition 1 is applicable for X. Remaining policies taken after 1st April 23, both the conditions are applicable. Now, in case of LIC policy X, how much is actual life insurance premium? 5,50,000. How much is 10% of sum assured? 5,50,000. Actual life insurance premium is exactly equal to 10% of sum assured. See, you will definitely get deceived by ICAI. Majority of the students, they will not look the date. They will see premium is more than 5 lakhs. They will not claim exemption under section 1010D for this, but this is actually eligible for exemption under section 1010D because this was taken before 1st April 23. So only one condition is applicable. Condition 1 is only applicable. Condition 2 is not applicable. You need not check condition 2. Condition 1 satisfied. That's it. Okay. LIC policy X is fully exempt under section 1010D. Correct. Now, shall we check for remaining policies? Remaining policies are taken after 1st April 23. Here two risks are there. First risk is you will not look the date, you will tax it. Second risk is you will combine X with other policies. You should not combine. What I said in the chart I clearly gave. Only if policy is taken after 1st April 23 and after 1st April 23, whatever the multiple policies that you took, for those multiple policies only you need to check aggregate premium. So if you take policy before 1st April 23, you are innocent one. You do not know that income tax department will bring this kind of amendment. So if you take policy, even though premium is more than 5 lakhs, it is exempt for you. But those who are taking policy after 1st April 23, they are not innocent. That amendment was already brought. So for them, those who took policy after 1st April 23, only after 1st April 23, whatever the multiple policies are there, only for those policies you will check aggregate premium. You should not check aggregate premium of policy before 1st April 23 and policy after 1st April 23. You should not do like that. Only those policies taken after 1st April 23, for those policies only you should check aggregate premium. Am I making sense? What am I saying? Are you able to understand? Good. Now, shall we check for A, B and C? 1 second. Now, policy A, B and C are there, right? In example 7, please tell me for A, B, C, these three are taken after 1st April 23. Am I correct or not? Taken after 1st April 23. These three policies were taken after 1st April 23. How much is annual premium for A, B and C? Please tell. 1 lakh, 3.5 lakh, 6 lakhs. Let's eliminate C. It is greater than 5 lakhs. 1010D exemption is not available. Correct. So 1010D exemption may be available for A and B. Let us check. How much is 10% of sum assured for A and B? 1 lakh, 3.5 lakh. Condition 1 satisfied for A. Condition 1 satisfied for B. Condition 2, aggregate premium of A and B. It is 4.5 lakhs less than 5 lakhs. So both A and B are eligible for exemption under section 1010D, correct? Shall I explain the next one, eighth one? Now 4 policies. 2 are taken, 1 is taken on 1st April 23, remaining are taken on 1st April 24. Don't get confused. 1st April 24 means after 1st April 23, both the conditions are applicable. So what will we do? In example 8, all policies are taken after 1st April 23. Am I correct or not? All policies are taken after 1st April 23. A, B, C, D. Everyone please look at the screen. Please tell me annual premium. 4.5 lakh, 1 lakh, 1.5 lakh, 6 lakhs. Let's eliminate D. It is greater than 5 lakhs. 1010D exemption is not available. Correct? Now we need to check among A, B and C. Am I correct or not? Now individually let us check. Annual premium 10% of sum assured. How much is 10% of sum assured for A? B? C? Condition 1 satisfied for A, condition 1 satisfied for B, condition 1 satisfied for C. Condition 2, options are available. Option 1, I will take combination of A and B. Option 2, I will take combination of A and C. Option 3, I will take combination of B and C. That much are available. Combination of A and B, how much is aggregate premium, aggregate annual premium? 5.5 lakhs, greater than 5 lakhs. That combination is not eligible, correct? A and C, combination is 2.5 lakhs, less than 5 lakhs. This combination is, okay, I'm sorry. A and C, 4.5 lakh plus 1.5 lakh, correct? It is 6 lakhs, which is greater than 5 lakhs. Exemption under section 1010D not available. Third combination, B and C, 2.5 lakhs, which is less than 5 lakhs. So this combination is possible for exemption under section 1010D. So we can conclude policy A taxable, policy B and C are eligible for 1010D exemption. Am I correct? Shall we see example 9? Everybody, as we go ahead, the complexity increases. It's like you are playing a game, the level is getting increased. Shall we see example 9? In example 9 also, all policies are taken after 1st April 23. Am I correct or not? All policies taken on or after 1st April 23. Tell me one by one policies. A, B, okay. X, A, B, C, yeah. X, A, B, C. First tell me how much is annual premium? 2.5 lakh, 2 lakh, 2.5 lakh, 6 lakhs. Last policy, annual premium is greater than 5 lakh, not eligible for 1010D. Straight away, 1010D exemption is not available. So you need to play game with X, A and B, correct? First of all, how much is 10% of sum assured for X, A and B? 2.5. Am I correct? 10% of sum assured. See, in that example, everything is plain. He did not emphasize about condition 1. He did not give importance to condition 1. His focus is only on condition 2. But we cannot tell in examination how he will ask the question. That's why I am habituating you. I am making you to check both the conditions as a habit. Okay. So in every problem, even though condition 1 is satisfied, on face, when you read the question, even though it appears to you that condition 1 is satisfied, don't ignore. Put on paper, put the pen and check condition 1 as well, so that you will not commit a mistake. So condition 1 satisfied for X, A and B. Now for checking condition 2, multiple options are available. Option 1, combination of X and A. Option 2, combination of X and B. Option 3, combination of A and B. Correct. Now, how much is aggregate annual premium for X and A? Aggregate annual premium for X and A, 4.5 lakhs. X and B, 5 lakhs. A and B, 4.5 lakhs. So all are less than 5 lakhs, less than or equal to 5 lakhs. So every combination is eligible. Now don't jump and take decision immediately. In this point, please check maturity, aggregate maturity amount including bonus. How much is aggregate maturity amount including bonus for this policy? X and A together, X maturity amount is 30 lakhs, A maturity amount is 24 lakhs. 30 lakhs plus 24 lakhs, 54 lakhs. Next, X and B, 30 lakhs, 38 lakhs, 68 lakhs. A and B, 30 lakhs, 24 lakhs, 38 lakhs. How much calculate? 62 lakhs. So where maturity amount is higher, in which combination maturity amount is higher? In combination of X and B, correct? In combination of X and B, maturity amount is higher. So let us exempt X and B. Let us exempt under section 1010B. And policy A, let us make it taxable. Are you able to understand? So whether to exempt or not, don't take decision based on premium amount or sum assured. Take decision based on maturity amount including bonus, because ultimately we need to pay lower tax, our objective. So where we get higher exemption, we need to choose it so that our tax liability will get reduced. Are you able to understand? Shall we discuss 10th example? Everybody. Example 10. How many policies are there? This is king. All policies are taken after 1st April 23. Am I correct or not? Now tell me all the 5 policies X, Y, A, B, C, right? X, Y, A, B, C. Tell me annual premium of each policy. 2 lakhs, 2 lakhs, 3 lakh. So last one, greater than 5 lakhs. Exemption is not available. Let's eliminate C. It is going to get taxed. Now we need to find exemption among X, Y, A and B. Correct? Now tell me 10% of sum assured in each case. Condition 1 satisfied. So in all the examples, all these are ICI material examples. I am not saying any my own. Okay. In every example, he did not focus on condition 1. because condition 1 anyhow you will check, his emphasis is on condition 2, but we cannot trust ICA, it will backstab you. Okay, in examination it will ask tough question consisting of both the conditions. Now condition 2, now for checking condition 2, let us, like I am writing in a different way. Condition 2, I am writing all probabilities here, x and y, x and a, x and b, correct? Next y and a, y and b, next a and b. All these are probabilities, right? In intermediate you would have studied permutations and combinations, accordingly only we are doing. Now let us check aggregate premium, aggregate annual premium for each combination. Aggregate annual premium for each combination. X and y 4 lakhs, X and A 4 lakhs, X and B 5 lakhs, correct? Y and A 4 lakhs, Y and B 5 lakhs, A and B 5 lakhs, correct? Now every combination is eligible for exemption under section 1010D. Now what is the criteria? We need to check aggregate maturity amount including bonus. Aggregate maturity amount including bonus. So for X and Y, how much is bonus? Not maturity amount including bonus. X and Y, how much is maturity amount? 12 lakh plus 24 lakh, 36 lakhs, correct? Next, X and A, 12 lakh plus 24 lakh, 36 lakhs. X and B, X 12 lakhs, B 36 lakhs, 48 lakhs. Y and A, Y 24 lakhs, A 24 lakhs, 48 lakhs, correct? Y and B, Y 24 lakhs, B 36 lakhs, 24 plus 36, 60 lakhs. Next, A and B, 24 plus 36, 60 lakhs, correct? Now which combination you can choose? Either you can choose Y and B or you can choose A and B. So if you choose Y and B, or you can choose A and B. If you choose Y and B, Y and B are exempt under section 1010D. Remaining policies taxable, correct? Remaining policies are taxable. If you choose A and B, A and B are exempt under section 1010D. Remaining policies are taxable, correct? So you can see Y and B or A and B, any of the combination. Now I hope you got complete clarity about 1010D exemption. Only one thing is pending, that is taxability. At the beginning of the class, I told you how tax treatment will be. Did you forget? You would have forget, but I did not forget. Tax treatment. I think in income from other sources, I gave tax treatment for 1010D. Please open and check. In income from other sources, I think I gave you tax treatment. I already told you in income from other sources that I will discuss this in 1010D exemption. Yes, page number 8.8. Did I tell you at that time that I will discuss in 1010D exemption? So, manner of computation of taxable income from life insurance policy, where sum is received for first time under life insurance policy during previous year. A minus B is taxable under other sources. My dear students, please remember, if your policy is expired and policy is not eligible for exemption under section 1010D. If it is not eligible for exemption under section 1010D, it is taxable under income from other sources. Total maturity amount is not taxable. Think logically, every year I am paying premium, it is expenditure to me. Ultimately, I am getting maturity amount. Maturity amount minus expenditure, whatever the income component that I am receiving, only that income component is taxable under income from other sources. That is logical, right? If we levy tax on total maturity amount, it is illogical because I am paying amount. I am incurring expenditure to get that amount, correct? So A, sum or aggregate of sum received under LIP. B, aggregate of premium. That means sum received minus premium paid. Only income component is getting taxed under income from other sources. Are you able to understand? That means what? Let's say I took life insurance policy, tenure 8 years. Okay, premium is 80,000. Annual premium 80,000. I took policy after 1st April 23, let's say. After 1st April 23, I took policy. Tenure 8 years, sum assured is 8 lakhs. Now we need to check both the conditions, correct? Let's say condition 1, actual life insurance premium 10% of sum assured. Actual life insurance premium is 80,000. 10% of sum assured is also 80,000. Condition 1 satisfied. Condition 2, annual premium is 80,000, which is less than 5 lakhs. So condition 2 is also satisfied. As both the conditions are satisfied, maturity amount is exempt under section 1010D. Now I am changing this example. Policy tenure 4 years. Okay, annual premium 80,000. Annual premium is 80,000. Maturity amount is 12 lakhs. Sorry, maturity amount is 5 lakhs. Maturity amount is 5 lakhs. Now, condition 1, actual life insurance premium how much? 80,000. 10% of sum assured 50,000. 5 lakh into 10%, 50,000. Actual life insurance premium is greater than 10% of sum assured. Therefore, maturity amount is taxable. Okay. In this case, total maturity amount is not taxable. How much is maturity amount received? Maturity amount received is equal to 5 lakhs. From this, I need to reduce premium paid. Get premium paid over tenure of policy. How much is aggregate premium that I have paid? 80,000 into 4 years. I have paid 3,20,000. So how much is income component? How much? 1,80,000. This 1,80,000 is taxable to me under the head income from other sources. Are you able to understand? Did you get clarity? Simple, na? That's what. Even though you get maturity amount for multiple policies, for each policy check like this, then there is no confusion. Here he gave for aggregate policies. Don't do combinedly. If you do combinedly for all policies, you will get confusion. Instead of doing combinedly, one by one you do. If you get maturity amount for 3 or 4 policies in current previous year, for each policy calculate like this. For each policy maturity amount minus aggregate premiums paid for that policy. For each policy arrive income component, tax that income component under income from other sources. Even though you get maturity amount for multiple policies, do it individually. For calculating income under other sources, it will be simple. If you do it aggregatedly, again confusion will come. Okay. Another point. For example, here bonus was also received. Bonus 1 lakh was received. That means I got 6 lakhs. 5 lakh plus 1 lakh, 6 lakhs. In that case, 1 lakh 80,000 plus 1 lakh, 2.8 lakhs is taxable under income from other sources. So whenever 1010D exemption is not available, in that case, maturity amount plus bonus received minus aggregate premiums paid during the tenure of the policy. That is the formula for income component. Such income component is taxable under IFOS. I hope you got complete clarity about 1010D exemption. That's it. Thank you.